Hello. Today is Friday, June 19th, 2026. Here is your daily signal. At his debut meeting as Federal Reserve Chair, Kevin Warsh oversaw the FOMC decision to hold interest rates steady and, according to Fortune, made a clear promise to deliver price stability, though without much detail on timing. Warsh, widely viewed as a Trump pick, surprised observers with a distinctly independent stance, steering away from political influence and setting a new tone for Fed leadership. The central bank, under his guidance, faces mounting inflation pressures from soaring energy costs and geopolitical tensions. On June 17, 2026, the Fed dropped its previous forward guidance, with Fortune describing the market's immediate reaction as negative. Analysts called Warsh's tone hawkish, and concerns grew about a lack of communication clarity. By June 18, business leaders and economists noted Warsh's signals toward a full-scale overhaul of the Fed, covering forecasts, forward guidance, the use of AI, and operational changes. In the near term, this shift has led to greater market volatility as investors grapple with uncertainty about future Fed policy and the absence of clear guidance. If inflation persists, tighter monetary policy could raise borrowing costs for households and businesses. The overhaul of communication and operational practices may reshape global financial markets, and corporate leaders are already adjusting their investment strategies to anticipate the Fed's new AI-enabled strategies and monetary approach. Moving next to a major development in resource supply chains. The G7 has pledged to cap China's rare earth market share at 60% by 2030, aiming to diversify sourcing and production, as Fortune reports. The G7, made up of the United States, Canada, France, Germany, Italy, Japan, and the United Kingdom, is focusing on reducing China's dominance, currently over 70% in the rare earth supply used for electronics, defense, and clean tech. Rare earth elements are central to manufacturing electric vehicles, wind turbines, and smartphones. According to Fortune, experts describe the G7's target as ambitious, demanding significant investment in mining and processing infrastructure. The G7 commitment, announced June 17, 2026, includes plans for new trade partnerships and incentives for rare earth recycling and exploration. Initially, G7 countries may face supply bottlenecks and increased costs while new sources ramp up. If successful, implementation could strengthen national security and lessen supply chain vulnerabilities. Failure would mean continued reliance on Chinese rare earths, potentially diminishing global bargaining power. Collaborative trade agreements might drive new mining projects across Africa, Australia, and North America, reshaping the global landscape for rare earth sourcing. And finally, onto transformative shifts in technology sector revenues. According to Next Big Future, SpaceX is poised to match Micron Technology's dramatic AI-driven turnaround, with projections showing SpaceX's annual AI revenue will jump from $1 billion in April to a run rate of $33 billion by October 2026. SpaceX, led by CEO Elon Musk, is following a path similar to Micron, which grew its quarterly revenues from $5.8 billion in early 2025 to over $17 billion by mid-2026 as its stock traded between $80 and $150. Both companies have harnessed advancements in AI to accelerate core business performance and valuations. This surge, reported June 18, 2026, places SpaceX 4 months away from a major revenue inflection, echoing Micron's fiscal transformation in 2025-2026. If SpaceX successfully mimics Micron's turnaround, it may become a leader in commercial AI for space, driving substantial investor interest and reshaping the aerospace industry. In the near term, we expect accelerated hiring, more resources allocated to AI divisions, and new partnerships. Looking ahead, competitors in aerospace could pivot toward similar AI-driven revenue models, signaling an industry-wide shakeup. Now, onto the markets. International equity performance was mixed, with Japan's EWJ surging 1.92% on robust momentum, while China's FXI dropped 1.04% as large caps continued to underperform. France posted a gain of 1.01% led by EWQ, and Italy's EWI rose 0.73%, while Belgium edged down 0.33%. Commodities saw U.S. oil, represented by USO, climb 0.56% against a backdrop of broad declines, Gold GLD slipped 0.38%, and Platinum PPLT tumbled 1.91% for the day, making Silver SLV the top loser among metals with a 1.81% fall. Copper CPER and Carbon KRBN logged modest gains, but Agriculture DBA and Lithium LIT retreated. In the sectors category, the S&P 500 tracked by SBY advanced 0.78% with semiconductors stocks sharply higher, up 6.62% and leading sector momentum. Healthcare Roman 45 and Finance XLF both slipped slightly, with Real Estate XLRE nearly flat. Among notable favorites, AMD surged 4.86% to outpace Nvidia, which gained 2.95%, while Microsoft MSFD edged up just 0.13%. Top gainer on the day was Addit's ATEX, soaring 175%, while INLIF Limited led on the downside with a 64% loss. That's it for today. You can find more news and details on our website. Goodbye.